Hey, what is going on YouTube? Welcome back. It's Travis here with JT Wealth. Now, it's Sunday, so I know everybody is looking for which stocks they need to be watching this week in the market. Well, a certain billionaire just bought two stocks big, and I mean real big, 800,000 shares of one, 900,000 shares of the other. And his company is always looking for stocks that have a catalyst that they are anticipating will occur in the near term. So this could be a huge move. I don't know what they know, but I want to be following along. So we're going to talk about these two stocks in today's video. Let's get into it. All right, welcome back everybody. Thank you so much for joining us. And like I said, we're going to be talking about two stocks in today's video. But before we do that, do me a favor, take 2 seconds out of your day, smash the like button for me, and consider subscribing to the channel if you haven't already. I also want to take 2 seconds out of my day and thank everybody who watched the One Chip Challenge video Julie and I did. We understand it's not your normal stock rated video, and we appreciated everybody that took the time to watch that video and left all of the funny comments you did in the comment section. It was a kind of fun, kind of miserable experience for us, but we appreciate you guys taking the time out of your day to watch that and support us. So thank you very much. Alright, so the billionaire we're talking about today is none other than Dan Loeb, and he's the one snapping up these two strong buy stocks. Now, Mr. Loeb is the CEO of Third Point and has a reputation for turning risk into success. His preferred strategy of going in and cleaning up the mess has built his firm into a 17 billion plus asset management behemoth, with both hands in the US and international equity and credit securities markets. Now, in the current environment, as we're getting buffeted about by epic-making public health crises, economic disruptions, and now foreign policy political disasters, Loeb sees a combination of risk and volatility as the key factors. Mr. Loeb was quoted saying that while valuation always matters, our analysis is more focused today on business quality, differentiation, innovation, disruption, and market structure. This contrasts with our previous focus as an event-driven fund on using events like spin-offs, recaps, mergers as opportunities to find cheap stocks. And it's an interesting background to keep in mind as we look at two of Loeb's recent stock buys. Now, both of them are strong buy choices with unanimous approval from Wall Street analyst core. Let's take a look at what is making those stocks so compelling. Now, for the record, I swapped these two stocks from the article's original order because the second stock is actually the more affordable stock in my mind, and I find that since I lose most of my viewers by the halfway point of my video, I want to give you the cheaper stock first. Maybe that way it'll give you more opportunity. I don't know. Maybe I'm completely off base with that. You guys are fine to buy the expensive stocks, but either way, I felt like this was a good idea. So here you go. And the first stock we're going to talk about is AES Corp, ticker symbol AES. Now, they were trading about $24.32 by close of business on Friday, but they have 6 analyst ratings giving them a strong buy rating with almost 25% upside, given a 12-month analyst price target of $30.33. Now, AES is a major generator and distributor of electric power, and the company out of Arlington, Virginia has a worldwide footprint with power generation facilities and distribution in 15 countries. Electricity is a vital commodity, and even with the pandemic-induced recession last year, the company saw $9.66 billion in total revenue. Along with the solid revenues, the company's stock is up 38% in the last 12 months. AES also pays out a dividend to its shareholders, and while the yield is modest at just 2.4%, the payment is reliable and has a 9-year history of regular dividend increases. And now we get to the interesting parts. During the second quarter, Loeb's Third Point saw fit to boost its holding in the stock by 49%. The fund bought 900,000 shares of AES, worth $21,888,000. That purchase brings Third Point's stake in the company to 2,750,000 shares, valued over $66 million. So when you already have $45 million of your company's money invested in a single stock, and you up it by 50%, to $62 million in a single stock, you 100% need some confidence going into that. There's a lot of volatility, but they seem to be exceedingly confident, as well as the rest of Wall Street's analysts, that AES has something big coming up in the future. Okay, and now let's talk about the second company in today's video from the article, and that is Zimmer Biomet Holdings. And ticker symbol ZBH was trading at about 145.46 in the after hours on Friday. But check it out, their strong buy rating is based on 13 unanimous buy ratings from all analysts involved in the ZBH stock. And there is a 12-month analyst price target of $192.69, which would be almost a 33% upside in the next 12 months. And of course, ZBH, as the name would lend you to believe, is in fact a medical industry. They're established in 1927 as a med tech provider with a portfolio of digital and robotic technologies used in diagnostics, joint replacements, data gathering, and analytics. And the company has rebounded quickly from the pandemic lows of the second quarter 2020 based on its recent revenues and earnings. Now, Loeb was clearly impressed by Zimmer as his firm took a new position in the stock to the tune of 800,000 shares. This holding is worth over $116 million at the current levels. Hardly chump change, guys, even for a $17 billion hedge fund. And Wall Street analysts have been showing the stock some love. Among the bulls is Needham analyst Mike Matson, who rates ZBH a strong buy along with a $202 price target. This analyst obviously expecting the stock to climb over 40% in the coming months. All right, there you have it, guys. Two stocks for you to look at in the upcoming week, AES and ZBH. Obviously, some big money is investing into these companies, and they have unanimous decisions from every analyst on Wall Street. This isn't a 50-50 split here. The guys who are tracking these companies are confident in their success in the next 12 months. Strong price targets, strong 12-month analyst predictions, and billionaires flooding people's money into the company. I don't know about you guys, but I'm definitely going to be watching both of these companies closely for the next foreseeable future. But let me know what you guys think about these two stocks in the comment section down below. I always love hearing from you guys, so don't forget, if you haven't already, give me a thumbs up, comment down below, subscribe to the channel, and as always, thank you so much for watching today's video. Until next time, bottoms up.
Big, scary pibble. I'm not. Sorry, man.